This is the trading strategy that changed everything for me, and in this video I'll be giving you the full guide step by step. I realized the reason I was losing money is because my strategy was overcomplicated. The market rewards simplicity. It's amazing how the most simple strategies are usually the most profitable, as well as the easiest to understand. Now, while backtesting this strategy, I was able to turn a $100 account into $1,700 in the space of 2 months. Now, we will get into the account statistics and the trades that we took later on in the video, but I just want to go through the strategy. So the strategy only uses 2 time frames, 1 hour and 1 minute. We don't use any indicators. All we are looking for is how the previous hourly candle closed here on the left, and then we are using the 1 minute chart here on the right to take our entries. Now, this style of trading is called continuation trading, where we are looking at how the previous hourly candle closes and we are taking a trade based on that. So for example, if the previous hourly candle is bullish, our belief is that the next hourly candle will be bullish as well. And obviously, if the previous hourly candle has closed bearish, our belief is that the next hourly candle will also close bearish. So today is Tuesday the 9th. Look how many continuations there has been since Monday the 8th. All of these bullish candles here, bearish continuations, bullish continuations. And as it stands, we are currently in the middle of a bearish continuation. Now, the easiest part of this strategy is to understand whether we are buying or selling, because we are just looking at how the previous hourly candle has closed. If the previous hourly candle is bullish, we can only look for buys during the new hourly candle, and if the previous hourly candle is bearish, we can only look for sells. Now, obviously what we're looking at here on the left is the hourly chart. So this is 1 hour's worth of price action. So for instance, yesterday at 11 p.m, you can see that price opened here and then closed here. So after an hour's worth of trading, price has closed higher than when it opened, and that is why price is pushed from here to here. For instance, here you can see we have got 3 continuation bearish candles, where 1 hourly candle has closed bearish, the next one has also closed bearish, the one after that has also closed bearish. That is what a continuation is. However, instead of continuing bearish here after the 10 p.m. candle close, we then turn bullish, and then we've got 1, 2, 3, 4 bullish candles that all continued in the same way before having 2 bearish candles. Now, obviously we don't know if there is going to be a continuation. If we did, it'd be a lot easier to make money. However, what I like about this concept is it's really simple to understand. How did the previous hourly candle close? Bearish. 3 till 4 we have closed bearish. So from 4 p.m, so when the new hourly candle opens, we will be looking for sells if we get an entry opportunity on the 1 minute. Now, this is a very straightforward idea. However, with every hourly candle close, there are a couple of things to consider. The only hourly candle trades that I don't trade after personally are closes like this. So we can see when we zoom in that we have got a bullish candle close here at 10 p.m. However, we have got a top wick rejection, and the size of this body is very small. So personally, that's not a candle that I trade after. It's just not clearly a bullish close. Obviously it is when you zoom in more on it. However, if we have opportunities at every single hour, there's no reason to be taking trades on candles where you're not too sure how it's closed. Same with this candle here. You can see it's a doji candle. When you zoom right in on it, it is technically bullish, and then the next hourly candle also closed bullish. However, when I see that, I'm going to walk away and come back in the next hour. It is rare that candles close at such an indecision. Most of the time you can see whether they're bullish or bearish, and there is opportunity to trade after. However, if you look at how many clear candle closes we actually have, it's so much better to be taking those trades as opposed to these ones here, for instance. So if it's an indecision candle, I tend to stay away. I also tend to stay away after huge impulsive moves. So for instance here, Tuesday, 8 a.m, you can see that the range of this candle is 140 pips. Now we can see what this looks like on the 1 minute chart. Price has moved a lot. Usually when the market moves this much, it is news inflicted. Now, the reason I don't take trades after candles this big is simply because price has been pushing down massively for an hour. So huge selling pressure to push price all the way down here. Now, after that candle is closed, we would have to look for sells because it has closed bearish. So we'd be looking to sell GU even after all of this selling momentum, which you may be happy to do so depending on your risk tolerance. But for me personally, I think that I've missed that chance. Everyone's been selling off for an hour. So once that hourly candle closes and the new hourly opens, what are the chances that price is going to continue downwards? Surely price is a little bit exhausted, and it just gives me a little bit less confidence as opposed to being part of the big move. I'm trying to get in after it where potentially there's not as much volume. So they're the 2 candles that I stay away from. But apart from that, all of these other candles candles I will be trading. If it closes bullish, I'll be buying. If it closes bearish, I'll be selling. Obviously, providing that there is an opportunity on the 1 minute. The only other thing to consider from an hourly point of view is if price is pushing into a key area of rejection. So let's say we are buying and price pushes into an area where it's rejected from previously. I may not buy after the bullish hourly candle close. I might just wait and see how price reacts to that area, which are quite easy to mark out. So you go in the hourly chart and you just look where price is rejected from previously. So here, for instance, price is pushed in, rejected 3 times, and then eventually flown down. Same with support. So if I'm selling into an area where price is rejected from previously, I may consider that. However, that's not always the case. If I get a really nice setup on the 1 minute chart, I'm still happy to take that trade 9 times out of 10, because yes, price can reject from key areas, but sometimes it just pushes straight through. When I've been backtesting this model, I haven't been looking at areas of rejection at all. I've just been looking at how the previous hourly candle closed and then taking a trade if it sets up on the 1 minute. So from an hourly perspective, indecision candles or massively overextended candles, potentially stay away from, and areas of rejection, that's all I care about from an hourly perspective. All the other times, I'm just looking at how the previous hourly candle closes and taking a trade based on that. So let's get into our entries then. Like I say, we use the 1 minute chart for this. So what we need to see is we need to wait for the previous hourly candle to close. And then when the new hourly candle opens, we will be looking for opportunities on the 1 minute. So now that we've got the hourly concept out of the way, let's have a look at the 1 minute chart, which is what we'll be using for our entries. Now this trade has literally just happened. It's 13:32 now, and you can see here at 13:19, there was an opportunity for a trade here. So the previous hourly candle has closed bearish. We can see that there, 12 till 1, bearish candle. So because of that bearish close, when the 1 till 2 candle opens, we would be looking for a sell. Now this is what I look for from a 1 minute perspective. We've got our bias, we are selling. Price is closed bearish from 12 till 1. So we're just looking for entry opportunities during the current hourly candle. So during the previous hourly candle from 12 till 1, you can see that we were clearly making lower lows and lower highs. Now when the new hourly candle opens, you can see that we've gone from making lower lows and lower highs, and we've actually tried to push up. So we're making higher highs and higher lows. So this is where the new hourly candle opens. So the 1 till 2, which is currently the candle that is trading. And you can see since that candle opened, we have been making higher highs and higher lows, which means buyers have stepped into the market and tried to push price up. So this red line is where the candle opened, and price was at 135,579. Initially, we pushed down a little bit, but since then, price has been pushing up, and we did get to 135,601, which is what this wick is here. So if we look at the hourly chart, we can see that there's a wick on the top of this candle. Now this wick is where price has tried to push up, and it's got to there before failing and is now continuing in the same direction as the previous hourly candle close. So the way we would get into a trade here is we know we're selling based off how the previous hourly candles closed. Price has tried pushing up since it's been open. Now what's going to happen is sometimes price is going to push up like it has been doing, and it's just going to continue up. And in that case, it's not a continuation candle because it's in the opposite direction as how the previous hourly candle closed, and there would be no trading opportunity. Because in order for us to get into a sell, the current hourly candle has to be bearish. Otherwise, we cannot get into the trade. So price opened at 135579. Price has tried to push up here, which is what the wick is at the top of this candle, failed to do so, and then this orange bar is where the candle flips bearish because price opened here, tried to push up. Now the reason the candle would be bearish at that point is because price opened here and it is lower than where it opened. Now because of this, we would be able to get into a sell. Now like I say, price has tried to push up and it's created a top wick. The price has pushed up to here and failed to continue higher, which is in line with how the previous hourly candle closed. Now if we turn this to a line chart, you can see this a little bit more clearly. Higher highs and higher lows. We've then shifted and made a new low, made a lower high, and then broken that low. So we want to see a low get broken and we can use the lower high to put our stop loss. Now, like I say, we need the current hourly candle to be bearish in order for us to get into a trade. Now we can see that this is where the candle flips bearish. So anything under here, we are able to get into a sell. So from higher highs and higher lows, we've then shifted to make a new lower high. You can see that shift from there to there. We've made a new low here, and then we've broken that low, and we would be into the trade at this point, which you can see 1 minute ago would have hit take profit. So we're using the previous high to put our stop loss, which is at 4.5 pips. We've waited for the low to be broken and we were triggered into that trade. We would have gone to break even at 1.5 risk to reward. So 3 minutes ago we would have gone to break even, and then price hasn't come back up and tagged us out at break even, which sometimes it can do, but instead we have continued downwards and we would have hit our take profit. So that's literally a trade that's unfolding as we speak. So hopefully that makes some sense. Let's get into some of the backtesting trades, which will hopefully illustrate the point even more. So what I'm currently doing is I'm backtesting this strategy from 2013, which is the earliest we can backtest here on TradeZella. This is the backtesting software that I use. The link is in the description to this. It isn't just a backtesting software, it's also a trade journal as well. So when you attach your live account to this is the sort of breakdown you will see. Now we can see we've got a net profit and loss of $1,700. If you look here to the account balance, you can see that on the 14th of January 2013, the account balance was at $100. We've then been able to grow the account balance all the way up to $2,139 in the space of the 2 months that I've been trading. Now we've been able to do this even though our win rate is less than 50%, so we're actually wrong more than we are right. However, because we always go for a 1 to 2 risk to reward, we are still profitable. So let's have a look at one of the trades we took while backtesting. So this was a buy position on Thursday, the 21st of February. And we got into this trade at 9:05. So the reason for this one is the previous hourly candle has closed bullish. So this candle here, the 8 till 9 candle, has closed bullish. It is a little bit more of an indecision, but it's more clear that it is bullish. So once we've had this bullish close, we are obviously looking to buy during the next hourly candle. So we can see what's happened here. During the late stages of the previous hourly candle, we actually started to make lower highs and lower lows. So this can happen. Now what happened on the live markets then is the current hourly candle that we were trading started to make higher highs and higher lows and then failed and shifted. Now that can happen during the current hourly candle, or it can happen during the later stages of the previous hourly candle. So we can see at 8:55, this is the highest point of the candle. It then started making lower lows and lower highs just before the 9 o'clock candle opened. Now we are still looking to buy even though we've made lower lows and lower highs just because of how the candle actually closed. So price did close higher than where it opened, even though we did make these lower lows and lower highs near the end of the candle. So when the new hourly candle opens, which is here, we were still looking for buys. Now we've had the lower lows and lower highs, and then just like on the live markets then, instead of price making a new lower low after making this lower high, it failed to break this lower low. So this here is the lowest point of the candle. Price couldn't continue downwards. It's been making lower lows and lower highs, failed to make a new lower low. It then made a higher low and then broken that. So once we see that failure of price being unable to make a new lower low, so this is where the lowest point was, we then made a lower high and then a new higher low, showing that price is now shifting bullish, which is how the previous hourly candle closed. So after we see this shift from here to here, we are then looking for a high to be broken. So this is the new high. Price has broken that, and we were triggered into that trade, and you can see that it did end up winning. Now we want to be triggered in during the lower part of the candle, just because that's where a lot of the momentum is. So let's say, for instance, here, this is further up the candle. We've already taken a winning trade. We're making higher highs and higher lows. We've then failed to break this high, and then this pattern, which happened just before the new candle opened, repeats itself during the current hourly candle. So instead of continuing upwards, we then start making lower lows and lower highs. We then have that shift, which is exactly what we look for, where price can't continue downwards. So lower lows, lower highs, failure to break. There's the shift that we look for. We've then broken this high and we'd be triggered into that trade. Now this one did actually work out and was another profitable trade during that candle. The reason I wouldn't have taken that is I would have already been into this candle down here, and they only take 1 trade per hourly candle. But as well as that is, we were much further up the hourly candle. So if we look here, this is where we were into our trade, all the way down here, where price has just flipped bullish and it's got plenty of room to push up, as opposed to this one where we were already that far up the candle. So we were already all the way up here. Now if we were entering that trade, we would have lost all the range from where price flipped bullish, which is here, all the way to here. So we want to be part of this move where the candle just flips and has got a lot of room to push up. So the way I've been backtesting this is every single hourly candle close. So start trading at 6 a.m. and I stop trading at 4 p.m. So every single one of those hourly candle closes, if a trade presents itself, I take that trade. Now, obviously that would require you to sit at your computer all day. And what I do on the live markets is I trade the 6 a.m. candle, the 7 a.m. candle and the 8 a.m. candle. I then go away and do what I've got to do. I come back then at 12 p.m. and I trade the New York session, 12 p.m., 1 p.m. and 2 p.m. So each of those hourly candle close, that's when I trade on the live markets. However, while backtesting, I've just taken every single hourly candle. So 6 a.m., 7 a.m., 8 a.m., 9 a.m., 10 a.m., 11 a.m., 1, 2, 3, 4 p.m. I trade all of those hourly candles. And the reason I want to do that is I want to make sure that on the live markets, I am trading the most profitable hours. If I backtest every single hourly candle, I can see when is more profitable to trade using TradeZeller. We've got all the account statistics here. So during January and February, which is the earliest I can go back, we've taken 191 trades, 84 of them won and then 87 of them lost, with 20 being break even. Max consecutive wins was 5 trades in a row and then max consecutive losses was 6. Now if we go into reports here, we'll be able to see day and time. Now this will give us an indication as to when our best hourly candle is. So if we go into trade time, you can see that 8 a.m. is our most profitable trading hour. We've taken 13 trades that have presented themselves during the 8 till 9 candle. We've made $633. Our least performing hour is 10 a.m. So we've made 22 trades during the 10 till 11 hourly candle, but we've actually lost money on that. So by doing this, if I see that over a long term, I will be taking the 10 a.m. candle out of the question. You see our most active hours at 7 a.m. where we've taken 22 trades. You can see the breakdown here. We don't trade from midnight to 5 a.m. Start trading at 6. And you can see all of the profit and losses here. 10 a.m. is not profitable, 12 isn't, and neither is 1. And then we don't trade after 5 up until 11 p.m. So it's really helpful to have all this information, and it just helps me tweak the strategy to perfect it even more. So in the last video, I did actually do January with a 100K challenge. I decided to go with $100 because I think it's just much more realistic. Obviously, you can get 100K FTMO challenges, but passing an FTMO challenge is hard in itself, and then continuing to trade that profitably is obviously hard as well. So for $100, let's start with that and let's just try and scale it as much as we can. Now with that, I am risking 5% per trade, which is obviously much more than I usually do. I usually risk 1%, but that's on prop firm challenges. So obviously you should only ever be trading with capital you can afford to lose. You'd have to lose a lot of consecutive trades in order to lose the account. And if you did lose that account, if you're comfortable with losing the money anyway, you can use that information to learn. So that's how I'm currently trading this. I started with $100. I'm risking 5% per trade, and that's on the current balance. So obviously it's scaling. So now we're at $2,139, and every single trade will be 5% of that. So it's not 5% of the initial balance, it's 5% of the current balance. And I'm just going to try and scale this account as much as I can by backtesting. Now obviously backtesting is a simulated environment. You can't really take into consideration the emotions you would feel trading live. However, I feel like the more I backtest, the more I should be able to just trade in a certain way on live markets too. So just forget emotions and just trade. And by doing this sort of backtesting, it's helping me have more faith in the strategy. And even though we do have a string of losses, you saw that we had 6 earlier on. If I know that from 2013 up until now, which is how long I intend to backtest for, I can see that over the long haul the strategy is profitable, then that would give me a lot more confidence on the live markets as well. I am confident on live markets and I am taking trades. However, it always helps to have that little bit more of a boost, and that is exactly why I'm backtesting from 2013. Hopefully you enjoyed the video. I am trying to explain the strategy more and more in each video, but if you do have any questions at all, please let me know in the comments, and thanks very much for watching.